Hello and welcome to Smaulgld. In case you missed it, top gold and silver stories for the week ended October 22nd, 2017. Why it's going to take years to internationalize the Chinese yuan. We're going to talk about Chinese gradual internationalization of the yuan and how that ties into this ridiculous gold-backed yuan oil story. So China's internal debt stands at 300% of GDP, and that's before their unfunded Social Security obligations. And we're going to see why that is a problem. During the week, Mike Maloney of goldsilver.com calls out Smaulgld. We're going to cover that. And we're also going to talk about the problem of analyzing solely from the gold perspective. So it's the old adage, when you have a hammer, everything looks like a nail. Well, it's the same with a lot of people who cover gold and silver. 2 plus 2 equals gold. You start with the answer, gold, and everything leads to that. And I'm going to show you, absent the fact that there is no source for this gold-backed gold convertible yuan story, why it doesn't make any sense anyway. But it's very difficult to see that when you look at everything from the perspective is, how does this piece of news help gold? Or how does this piece of news help silver? And of course, if you're looking to analyze stories that way, you could ignore the rest of the information, the rest of the data, the lack of sources, and you'll come to the conclusion that gold and silver are set to skyrocket. And you have to realize there's reasons why gold and silver don't skyrocket, aside from just manipulation. My point is, honest money must be surrounded with honest narratives and reporting, and that's what I try to do here at Smaulgld.com. Now, I know that's not as popular as just throwing out stories that's saying, here's why gold and silver are set to skyrocket. People want to believe those stories. They have a vested interest in believing those stories. And of course, if you refute them or you don't believe them, you're a shill. Okay. Also, during the week, regulated Bitcoin futures trading begins. Russia made a huge gold purchase in September. We'll talk about that. There were strong Indian and gold import data reported for the month of August, and Shanghai gold withdrawals were also very strong in September, and this contrasts the weak U.S. Mint demand. And then also during the week, we put some of the numbers to the test. There's an old story out there. China's got so much gold, all it has to do is flip the switch and revalue its gold, and all of its problems go away. We can take a look at some of those numbers and show why that's not true either. So China, can it save itself from its own debt monster? Don't think so. Let's take a look. Either way, if you enjoy these types of reports, and again, they are not what most people want to hear, and it's not because I make them up. It's just because there are good things about gold, there are bad things, not bad things, but there are things that don't necessarily work in gold's favor. Same with silver. I point them out. If the story is positive and it's sourced, I report it. But when I see stories that I think don't make any sense, or basically omitting or failing to recognize other factors, well, I'm going to point them out. And if that means that the story, like, for example, sovereign gold size buy in 45 days will shock the world. Now, I said from the beginning that that story was absolutely ridiculous, and it turned out to be absolutely ridiculous. But for 45 days, people were waiting for this sovereign-sized gold buy that was going to come along and shock the world. Didn't happen. There's a reason these things don't happen. Let's pay attention. All right, gold and silver during the week. Down 1.8% to 1280. And silver also closed, but managed to hold on to the magic 17 number, was down 2.4%. And the gold-silver ratio still above 75 to 1. If you look at a one-year chart, it's gone from about 70 to 1 to about 75 to 1. 5-year chart, it's gone from about 50 to 1 to 75 to 1. This is another story. The silver pumpers will tell you unsustainable gold-silver ratio has to come down. Natural ratio 16 to 1, 1 to 1. Buy a house with 500 silver eagles. All right, go ahead. Really, the thing speaks for itself. But just so you need a longer term period here, the gold-silver ratio only during the height of absolute silver mania, with the Hunts brothers trying to buy every last ounce of silver on the planet, did the gold-silver ratio even approach 16 to 1 over the last 60 years. So if you got 60 years to wait, maybe that might happen again, but I wouldn't count on it. Now let's take a look at some of these Chinese stories. So here's just a story. This is in The Economist. The internationalization of Chinese currency has stalled. And the reason it stalled is, first of all, China is working on this gradually. So that goes totally against the idea they're just going to throw out the gold-backed yuan and then thrust the yuan into the international spotlight. You have to realize that if China were to do that, it would upset so many things in their economy. Their exports, their international trade relations. Their sole purpose of China is not to help gold owners raise the price of gold. China has an economy to run. China runs its economy. They just met. They're still meeting. The Chinese Council. They meet for a week and they decide what they are going to do about the economy. And I can guarantee you the number one thing on their minds is not how to get the dollar crushed and how to make gold prices go higher. But again, you read the gold media and they make it sound like that's all China's about. They just look out to how can we get more gold? How do we crush the dollar? No, they are working on a much longer plan and they are centrally planning everything. And it doesn't involve thrusting upon the world a gold-backed yuan. In fact, the gold yuan international rates, this is from The Economist, has fallen in the past 2 years. It has regained its ranking as the world's 5th most active for international payments after slipping to 6th in 2016. But its share of this market has slipped from 2.8% in August 2015 to 1.9% now. A lot of people don't realize this. A lot of people in the gold community think that the yuan has taken over the world. There's a reason it's not. We're going to go through some of those reasons, and gold doesn't play into any of them. By the way, there was an article last week that we discussed. It said Saudi Arabia is going to force or compel China to accept the yuan. And it was just some guy's opinion of some two-man firm. It was his opinion. CNBC reported it as news. And Mike Cernovich, who is a guy who prides himself on debunking fake news, he actually posted a tweet saying, "Rest in peace, petrodollar," and then linked to the CNBC article. So you can see how these stories gain credibility because they're in CNBC or they're in the Nikkei Asian Review and they say this and people believe, well, then it must be true. Here's a quick story. Russian issuing crypto ruble. Now I'm not going to go through all the stories. I'm going to try to focus on this Chinese story and a few of the other top stories. You can check this out. London's gold crown is slipping. Here's another story about the petrodollar. The petrodollar is dying. There's going to be no need for US dollars. One thing that people are not paying attention to is the United States itself has become a massive oil producer and exporter. So countries are going to need dollars if they want to buy oil from the U.S. No one's talking about that. I did an article on that. Is the U.S. dollar the new petrodollar? Because if the U.S. becomes a top 5 oil exporter in the world, well, you're going to have dollars. Here is a story. Wall Street Journal. Smaller Chinese cities are buying empty homes to lift property market and piling up debt. So here you have a case where a Chinese city, which is owned by, they're all backed by the federal or Chinese government. They want to lift the property market. What do? They buy empty homes. That's not the long game. That's not China's smarter than everybody else. That is classic Keynesian, worse than Keynesian, just buying stuff, going into debt, just to keep the ball rolling. You talk about kicking the can down the road. Well, there you go. Chinese cities buy off housing glut with borrowed money. A push by the Chinese government to ease local housing gluts and fill empty apartments is creating a different headache by driving indebted, and you can figure out what they say after that. This is not a smart move to keep going into debt. China headed down the path of debt destruction. Now, let's talk about this game changer for gold. Now, this particular Mike Maloney, gold, silver, YouTube, I think it has 40,000 views. So there's 40,000 people who have some concept that this is like a true story. Now, in the story, Mike is talking about how one of his colleagues had written an article, and he mentions this gold convertible yuan concept. And I don't remember. It was like, it looks like 16 days ago then. It was a couple of weeks ago. I put under the last time he put the, what is the source for this ridiculous gold-backed yuan story? Nothing but a story that opened with, quote, China is expected to, but didn't say by whom. The idea makes no sense for many reasons, which I didn't want to go into, because I said there's no point in refuting a story that has no source. Well, Mr. Maloney then, he then opens up his article, he starts talking for about 1:50, and then he cites that I have made this comment. And then he says, they say no source. Well, I'm going to give you a source. And he cites the Asian Nikkei review story, which doesn't have a source. And then he cites another story from the China Morning Post, which cites the idea of a yuan-denominated oil contract, of which is not in dispute. Sure, if they're going to sell oil, they want to sell it in yuan. But the gold part is the part that is not sourced. There is no Chinese announcement, as some commentators have said. There's nothing to indicate that gold will be involved in this contract. And in fact, China is not going to allow, and does not allow, gold to be exported from China. So a lot of commentators, including Mike, I believe, are saying that the gold will be convertible on the Shanghai Gold Exchange. It's not, can't happen. That's not how it is. So that story is now shifted. Well, the gold will be sourced from somewhere outside. And as Alistair McLeod pointed out on an interview with Rory Hall, the Daily Coin, that's a separate contract. That if somebody decides they want, an oil producer decides they want to take the yuan and go buy gold with it, have at it. Good luck. That's got nothing to do with Chinese backing it in gold or converting it into gold if they're not doing it on the Shanghai Gold Exchange. Those are two separate contracts. One further point that Ghost Jansen noted during the week is that if they want to take the yuan and go buy gold, guess what? They can't buy gold with yuan on COMEX or LBMA. They don't take yuan. So his whole story has just kept going off and off, and people are trying to make it real. They want to believe it. There's no source for this story. I thought, oh, geez, Mike found the source. I guess that's great. I'll just have to say, good on you. I was wrong. I was looking for a source. I couldn't find one, but thank you, Mr. Maloney, you found one. No, he didn't. He didn't find a source. He found the same article with no source, the Asian Nikkei review. And so there, he found the source. He did not find a source, but the story is out there. Now, what's interesting is David Morgan of the Silver Investor Report, or he's been involved in silver for a long time. I think that's the name of his website. He was on Reluctant Prepper, and he also looked at this as well. And I had a quick conversation with him a couple of weeks ago, and I explained there is no source to this story. I explained what I had found. He had done research, and he had listened to the Alistair McLeod interview, and he realized, oh, so oil producers are going to get yuan, and they might be able to buy gold with that, but not on the Shanghai Gold Exchange. So there's no gold backing and there's no gold convertibility by China whatsoever. Now, people are saying that that's, it's not gold backed. And he gave the example, which is something that I had said as well, that just anytime you get dollars from someone and then you go and buy gold with them, that doesn't make the dollar gold backed. You can listen to my David's interview with Reluctant Preppers as he lays out why this story is not a story. What's interesting is this particular video has 2,200 views. The Mike Maloney video has 41,000 views. And of course, this video that you're watching now will probably get 600 views. So that highlights how once you have a platform, you can basically get a story out there like CNBC. China's going to compel Saudi Arabia to accept the yuan. Well, that becomes a story. Doesn't matter what I say, what even David Morgan says. If people want to believe these stories and they see it in a place where everybody else saw it, then it becomes a source. Sad state of affairs, but that's what we're dealing with. Now, here's one. Luke Roman is cited on Twitter as he was, not on Twitter, but he's on Twitter, but he was cited in the original Asian Nikkei review story about the gold-backed yuan. He's on record, at least on Twitter, saying there is no gold-backed yuan, that the gold will be sourced and will not be sourced at the Shanghai Gold Exchange, will be sourced outside of China. And in that story, that particular story, people who believe that story is then that the oil producers will then take their yuan and go buy gold elsewhere, and that will create additional gold demand. Okay, that's not a gold-backed yuan. That's not a gold convertible yuan. However, he cites here in this particular tweet that the story is gaining traction. And, you know, the story about the gold-backed yuan and the story about the gold convertibility and so on. However, he cites an article, which I would think he doesn't believe, because it says, this is Barron's, and it says that basically the gold will be converted on where? The Shanghai Gold Exchange. That just went away, but any event. So I don't see how the story is gaining traction, because if that story is not what the story is, then basically, what story is gaining traction? That's not the reality from what we understand the story now to be, which is the gold is not going to come from the Shanghai Gold Exchange. It's going to come from elsewhere. So again, people trying to promote this concept that something big is happening. The story that's big, relatively big, and this is the title of this blog post, this video that you're watching, is the gradual internationalization of the yuan. Yes, they're going to sell yuan. They're going to sell oil for yuan. That's going to take a while, and that's what the story is about. The gold part is all speculation, unsourced. So, another thing, you know, we're seeing all these debt numbers coming out of China, and all the people that promote China as this gold savior. Sun Tzu, you got to read Sun Tzu, Art of War. Yeah, Art of War, my eye. Art of War and central planning. Borrow more than your adversary. That's what we're learning about what China's modus operandi is today. It's not some type of long, secretive game where they're going to roll out their gold into a stadium one point and shock the world that the United States doesn't have their gold. The world doesn't run on gold. I'm sorry, but people think that the people that are involved in the gold community somehow think that the whole world runs on gold. The whole world thinks about gold. Gold is central to their strategy. Anything that has to do with gold, that is front and center. It's not. These countries have so many other things to think about than gold. All right, let's move on. Sun Tzu. Here's one. We just talked about above the percentage of yuan in international payments. Well, find on this chart for me where the Chinese yuan or RMB is a amount of global reserves held by foreign central banks. Well, there's dollar reserves, and there's euro reserves, and there's yen reserves, and there's pound reserves, and oh, there's the yuan. There it is, taking over the world. All the foreign central banks are just gobbling up those yuan and holding them on their balance sheet because it's the most valuable thing, because China plays the long game, and China's got gold, and China's going to crush the dollar, and China's going to back the yuan with gold. Now you can see, if you look at in the overall scheme of things, these stories are absolutely ridiculous. Here's a story from Reuters. China's central bank says yuan's reserve currency role will gradually emerge. There's been, you go back, you can look at stories from 2010, 11, 9, 8. This is what China's been working on for almost a decade. And where are they? They're losing ground in payments, and they're not gaining much ground in reserves. Why? China's more interested, at least at the moment, in keeping its economy going. We're going to see how they keep their economy going in a second. Here's something. China capital controls continue to hamper yuan internationalization. Of course they do. But gold-backed yuan, game changer. See, if you look at everything from gold, you miss all these other things that are going on with China. Here, Fitch. Chinese internationalization slows. Of course it does. China's yuan global March year SDR entry. Not going anywhere. This is from China Daily. There's so many stories here about how China has difficulty. They've sold off $1 trillion of reserves over the last 18 months. They've got capital controls. They're having trouble keeping their economy growing. We're seeing that their exports are now growing at a lower rate than their imports are growing. China is a huge country. It is a complicated thing, and there's no way, no matter how smart those 500 people are on the committee or the 200 people, the central planning committee, that they're going to get everything right. And they're going to err on the side of, if we don't know what to do, we're going to borrow more money and push it off into the future, and we're going to try to generate more growth. And this is funny, just to take a quick break from the China story. Cryptocurrencies like Bitcoin are not mature enough to regulate, so says Mario Draghi. Okay, so he's basically saying, put it off. We don't need to worry about them now. Too small. Here, Business Insider. Chinese debt is so bad that even Chinese bankers now say it's a bubble. I find that people often forget about the scale. When you are dealing with a debt bubble, and you know it's a debt bubble, you are not going to launch a gold-backed yuan and potentially cut off your export-driven economy. You're not going to try to shake things around such that you might lose whatever gains you may have just so you can crush the dollar and boost gold. That's not, I can't stress this enough. When people look at gold and you start with gold as the answer, yeah, you're going to find all this stuff that makes it seem like China's got no other interest other than helping out the gold price. They don't. They've got a lot of problems. They've got a lot of successes, but they have a lot of problems. There's your national debt clock of China. Here's goes Jansen. So there was an article basically saying that, well, China could just flip a switch and, you know, and just revalue their gold, and now they don't have any problems, and then all that stuff that they bought with debt, they still have, and now they just dominate the world. Okay, but they can't buy gold with the yuan, these oil producers. So, well, the point here was the one I made was, let's go down to that right now. I had done the charts on how much gold China actually has. I'm going to open that up and we'll take a look at it. But yeah, can China's gold save it from a debt collapse? And if we look at that, you'll see, and I even give credit for how much gold they might have on not just what's on the People's Bank of China. And we'll see in those charts, I revalue those charts to $4,000 an ounce, $10,000 an ounce, $13,000 an ounce, and show how much in nominal dollar terms they actually have in gold, and you'll see it's not going to save them at all. Now, you don't believe me? China itself says, Chinese central bank says yuan reserve currency role will gradually emerge. So this is not going to just happen overnight. They're going to come out and announce, well, some say they already announced it. They didn't, a gold-backed yuan. All right. And let's continue on with the long game that China's playing. There's the guy with all that debt on his back. There's Coach Jansen. Now, Russia, I report on Russia every month. I report on their treasury holdings and their gold purchases. There is a much stronger story for Russia playing this antagonistic role against the United States because Russia has no trade with the United States. Russia is adding gold, but people think Russia's buying gold. They're not. They're taking it off their domestic mining production, which is the second largest or third largest in the world, and they're going to soon buy it from Moscow Exchange. But they're also adding U.S. treasuries. Russia has one of the best balance sheets of the emerging market nations because it doesn't have that much debt like China, and it has a decent amount of gold and it has a decent amount of U.S. treasury. You can see they've increased their treasury positions, but it doesn't have much of a complex or diverse economy because it basically, its number one export is oil, but it is, I think, the number one oil producer or exporter. So Russia is a different type of entity. It's less planned. It's also less, it's got less risk in it in the sense that it doesn't have the same amount of debt. And it doesn't have the same amount of people. And it doesn't have the same amount of people that have just recently moved from subsistence farming in the middle of the country into these massive mega cities. So the growth in Russia is slower. It's a different, they also have more weapons than China. So it's a much different country. But either way, they make it sound like both countries, the only thing that's on their mind is gold and taking over the United States. Now, the Russian central bank has about $73 billion worth of gold. They have $103 billion worth of U.S. treasuries. These gold numbers are not that big to make any difference, and we're going to see. Let's go over there now with the what gold is worth. And we'll just say that Russia's central bank has about the same as People's Bank of China. They're very close, within 50 tons or so. What I did here was I took the People's Bank of China's gold, and I also added in all the other gold that I and others think might be in China, and I gave it all to the government and let them roll it into the People's Bank of China if they want. So you got Hong Kong imports over the last 16 years, Chinese mining over the last 16 years, maybe Shanghai imports. We don't really know what they are over the last 5 or 6 years. We give them about 20,000 tons. So we say, yeah, we don't believe this 1,800 ton number. We give them 20,000 tons. We give them about 615 million ounces. And at current prices, that's 803 billion. That's nothing. That in grand scheme of global finance, even if they have 20,000 tons of gold, they roll it out and put it in a stadium. That's another story I never understood. A country's is gonna do that for what purpose? I don't know. Then it's game over because the United States isn't gonna roll its gold out into a stadium. $803 billion. Not much. Okay, so you move it up to 4. You just unilaterally flip a switch. You move it to 4,000, which you could do. I mean, the United States did it. They moved it from $20.67 in 1933, and then by 1934, the Congress just said it's $35 an ounce. So there is precedent for that, but that was a 67% increase. This would be a 4-fold increase, and that would still only get you 2.4 trillion, or about half of overall QE. So even if China has 20,000 tons, they revalue it to 4,000. Now they got $4.2 trillion. Well, that's not enough. So they just figured they got nothing else better to do but totally throw the whole world on its ear by unilaterally moving the gold price, not from 1,300 an ounce to 4,000, but to 10,000 an ounce. Well, then they got 6.81 trillion. If they move it to 13,000, they get 8 trillion. Well, sorry, that's not going to do it either. They already owe. I think these are official. It's $28 trillion is their debt. They owe even more in unfunded liabilities. So even if they were managed to make this dramatic change unilaterally to $13,000 an ounce, it still is not enough to make them say, look, we don't have any more problems. We just raised the gold price. By the way, if you unilaterally raise the gold price, you can't unilaterally raise the gold price unless you're willing now to buy all the other gold that's on the market out there. So basically, you'd have to buy the rest of the gold at the same price. Now, why would China want to have all the gold in the world and pay for it when they owe all this money? The whole situation, it can never be done where you just overnight say the price of gold is 10, 15 times higher. It's ridiculous to think that a country would even approach that. What the United States did, and they got away with it, when they raised the price of gold 67%, and then when they kept the price of gold at $35 from 1934 to 1971, which was a ridiculous thing to do, they had the buy-in of all the other countries, the London Gold Pool. They're all trying to keep the price under Bretton Woods at $35 an ounce. So for China to decide it's just going to flip a switch, even if it does, it's not going to have enough nominal value of gold to save it from its current debt monster. All right, here we go. As China overbuilding reaches peak, slower property construction growth is a drag on China's third quarter GDP. I mean, there's a limit to how many of these ghost cities you can build, how many bridges you can build. And so now they're focusing on the service economy. Again, smart, if you're a central planner, you realize you've overbuilt one area, now you have to build the other part of the economy. Okay, but are they going to get it right? They already got it wrong. The amount of debt they had to do to get where they are is just too much. And, their economy just grew. I think if you look at this one here, you'll see that, according to the New York Times, the Chinese economy did grow in the third quarter, but their borrowing grew faster than the growth. Now, what does that tell you? That means you have to borrow more and more money to get less and less growth. And that's what's happening in China. That's the law of, you cannot continue to bring demand forward and just keep borrowing and borrowing and borrowing and hoping you're going to produce more GDP. It's not going to happen. And unfortunately for China, their balance of trade surplus is now slowing. So now they're bringing in more goods and they're shipping out less. They need to keep that export thing humming. And China's economy grew steadily thanks to loans and homes. Okay, so the more you borrow, the richer you get. So you can see this overview of the Chinese economy, not viewed from the perspective of gold. You can see where gold is not the number one thing that China is thinking about. Nor is Yuan internationalization nor is dethroning the dollar. Their number one goal of the economy is to get the thing going and keep it going, to keep the people fed, happy, sheltered, amused. They cannot have 1 billion plus people out of work. Not in those cities they can't. They have to keep the economy humming along. And so they're going to borrow money. They're not going to go out and back the yuan with gold just to crush the dollar and gain yuan internationalization. And by the way, if they even did back the yuan with gold, they wouldn't be internationalizing the yuan at that point. They'd be internationalizing gold. That's not their goal. Remember, with gold, the best thing about gold is it stands in the way, if you have a gold standard, against borrowing. Why would China want to not be able to borrow when that is how they run their economy? And the Chinese paper put out a commentary. This is the translation. I didn't write this. Commentary. Socialism is great. Chinese Party Congress sets eyes on 2049 and beyond. So basically they go through why communism actually works, why socialism is the greatest thing. And I find this odd that the gold community is cheering on China when China is cheering on communism. They're not cheering on gold. They're cheering on communism, central planning, public works, and full employment based on what the government does. Now, I think that's it. No, we got more. That's the gradual one there on the getting the yuan to be a reserve currency. Okay, quickly, the Indian gold imports. This was some of the things that we put out during the week. You could check those out. I did one on gold imports, big gold imports into India, big silver imports. You can see the silver and gold bulls there. Zero Hedge reported ECB purchases. And remember, what I'm trying to point out here is not that China is unique in its debt, but everyone is all over how the United States borrows money, has unfunded liabilities, and neglects the fact that China is at it in a much bigger way than the U.S. is, right? Think about it. What is Trump complaining about? We don't have infrastructure. Look what China's got. And he wants to spend money on infrastructure. But even if the United States were to spend money on infrastructure, Congress is not going to overbuild and not going to build ghost cities in the hope that 30, 40 years from now, people might live in them just to generate GDP now. That's not, even in the United States where it's reckless spending, Congress would never approve. Wouldn't even be thinkable. The only way you can get Congress to approve stuff like that is when you own the Congress the way the Chinese government does. That's why they're able to get away with these big plans, because they tell the people this is going to work. And it does work. Initially it works. Of course it does. You put everybody to work building stuff you don't need, and then you pay them for it. And then when the banks that you use to lend the money don't get a return on what they built, the government bails them out. That's the Chinese model right now. Not much to report on the U.S. Mint. They're at 750,000 American Silver Eagles to date and 8,000 American Gold Eagles. Again, stark contrast to Shanghai Gold Exchange. We're in the second biggest September month ever. Big turnover in the Shanghai Gold Exchange in gold in September. U.S. economic data, as same as it ever was, just tepid, okay. Here's the other one. China's dumping treasuries. China's trying to crash the dollar. No, they're not. Look at the data. China is now the largest, again, holder of U.S. treasuries, $1.2 trillion worth. Look at that. Since Trump's been elected, boom. They're not dumping treasuries. They're not trying to crash the dollar. Yeah, sure. China may want to do that. Russia may want to do that. They also don't want to crush themselves in the process. And clearly, they are not dumping treasuries. There's the debt collapse one we already saw. And Russia steps up its gold purchases with a massive buy in September. We saw that as well. You can take a look there. And finally, Bitcoin derivative trading has arrived. I did an article on that. We now have a federally regulated Bitcoin futures exchange. And you can check out that article. I asked the questions, what does that mean for Bitcoin trading? Thank you very much for listening.